Bank Negara has kept the overnight policy rate at 3% amid robust domestic demand supported by strong labour market conditions. This as the central bank pointed to slower external demand and a decline in commodity production, which affected Malaysia's economic growth in the second quarter of this year. This is the third consecutive time that the OPR has been at 3%. In May, BNM raised the OPR by 25 basis points from 2.75%. The central bank said that at the current OPR level of 3%, the monetary policy stance continues to support the economy and is consistent with the current assessment of inflation and growth prospects. In a statement, BNM said that continued employment and wage growth, especially in domestic market-oriented sectors, improved tourist arrivals and spending, investment activity supported by further progress on multi-year infrastructure projects, and the implementation of catalytic initiatives under the recently announced National Master Plans are factors that will support the economy's growth momentum next year. The central bank adds that while the growth outlook is subject to downside risks stemming from weaker than expected external demand and larger and protracted declines in commodity production, upside risks mainly emanate from stronger than expected tourism activity, a stronger recovery from the E&E down cycle, and faster implementation of existing and new projects. On the subject of inflation, BNM said headline and core inflation continued to ease amid more moderate cost conditions, which were in line with expectations. It says the trend is likely to continue in the second half amid continued easing momentum of price increases and reflective of a high base in second half of 2022. The Securities Commission has issued the revised guidelines on market conduct and business practices for stockbroking companies and licensed representatives. The revised guidelines, which take effect on Thursday, outline the requirements that would allow stockbroking companies to offer fractional share trading services for shares listed on Bursa Malaysia. A fractional share is a portion of a stock that is less than one standard board lot. SC Chairman Datuk Sri Dr. Awang Adik Husin said that by allowing retail investors to trade in fractional shares, individuals, particularly the younger generation, would now have increased affordability and flexibility to trade and invest in more expensive blue chip stocks at the fraction of the standard board lot value. He added that it would also allow retail investors to diversify their portfolio whilst creating a more inclusive capital market for all Malaysians. To support the orderly development of the capital market, Awang Adik notes that it was important for stockbroking companies to have the necessary controls and systems to safeguard investor interests. Trading of fractional shares was one of the capital market initiatives announced by Prime Minister Datuk Sri Anwar Ibrahim in June this year to make share trading on Bursa Malaysia more accessible, affordable and inclusive for retail investors, particularly the young investors. SkyWorld Development's wholly owned subsidiary, SkyWorld Development Vietnam Co., is acquiring 1.3 acres or 0.53 hectares of land in Ho Chi Minh City, Vietnam. In a boss filing, the company said it acquired the land through the purchase of a 100% stake in Tuan Ta Trading Production and Real Estate Trading Joint Stock Company for about 350 billion Vietnamese dong or 67.9 million ringgit. The project company is the sole and lawful user of a parcel of land located at Ward 16, District 8, and simultaneously, the vendors are in the process of procuring the transfer of land use rights for another two adjoining parcels of land owned by several individuals. SkyWorld said the land is about 12 kilometers from the Central Business District in District 1 and well connected to one of the major arterial roads, namely Vo Van Kiet Street, linking the west of the city to the CBD. The developer said the project is estimated to have a gross development value of 310.4 million ringgit. Founder and non-independent EC Datuk Sri Ng Tian Ping says that this is a key milestone in the developer's history as it is SkyWorld's first venture overseas and feels that the group is in a good position to benefit from the trend of urbanization in Vietnam. International car maker Proton Holdings said its sales crossed the 100,000 unit threshold for a fifth consecutive year in August, a month ahead of when it reached that milestone in 2022. In a statement, Proton said with 13,955 units delivered last month, year-to-date sales for 2023 now stand at 104,602 units, 19.6% higher than the volume recorded for the first 8 months of the previous year. With total industry volume of the month estimated to be at 74,200 units, Proton said its market share is projected to be at 18.8% for August, with year-to-date market share of 20.8%. The carmaker said its volume growth, however, remains ahead of TIV, which is now estimated as 12.2% for 2023. Proton said X90, X50, Persona and Exora continue to lead their respective segments. For the first 8 months, 45,836 units have been delivered, which is an increase of 34.2% over the same period in 2022. Proton EDA CEO Roslan Abdullah said that after setting a new volume record the previous year, Malaysia's automotive industry is on a trajectory to reset the record books again in 2023 as Proton and other brands continue to compete for sales. He said that for Proton, the sales growth is a reflection of how the company's focus on delivering better quality products paired with premium experience have a positive effect on customers. Roslan adds that going forward, its efforts towards better products and services will be boosted by its latest ISO accreditation as well as the car maker's impending entry into the electric vehicle space. Malaysia will limit retail purchases and boost enforcement to prevent locally produced rice being sold as the more expensive variation as the fallout from India's export curbs continue to upend the market, Bloomberg reports. Purchases will be capped at 100 kilos per person, effective immediately until supply concerns ease. Agriculture and Food Security Minister Datuk Sri Muhammad Sabu was quoted as saying that he receives complaints almost every day from people about their difficulty in getting white rice. He adds that the issue is being looked into seriously by his ministry to ensure supplies are sufficient. According to Bloomberg, export restrictions by a top shipper India have sent shockwaves across Asia and Africa, prompting worried consumers to implement measures to secure supply and contain rising food costs. Malaysia started checks on wholesalers and commercial millers last month after allegations that local grain was being sold as imported rice at higher prices, according to the minister. He says that stockpiles are currently sufficient and local white rice prices are still among the lowest in Southeast Asia. Malaysia, which consumes about 200,000 tons a month, has inventories equivalent to 1.5 months of consumption. Padi Beras Nasional, or Bernas, last week announced a 36% price hike for all imported white rice. Malaysia buys about a third of its supply from overseas, mainly from India, Thailand, Pakistan and Vietnam.